they can't handle the emotions of their stop loss being hit.
I swear to God, every time my stop loss get hit, I just be wanting to and just screaming this bitch. Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy reaction video. You know what I'm saying? So today we reacted to Jadecap, you feel me? 14 years of brutally honest trading lessons in 30 minutes, you feel me? Hey, and I feel like this is about to be a W video, so let's go ahead and get right into it. If you're new to my channel, just know I have not seen this yet. We do this all together, you know what I'm saying? I react to everything with y'all, so let's go ahead and do this real quick.
I've been trading for 14 years, made $4.5 million in profit. $2.5 million of that I made this year in one payout, which was the largest payout in prop firm history. And I'm gonna compress 14 years of brutal trading lessons into this one video. All right, so
hey, I'm already ready for this, you feel me? I'm already.
Lesson number one is overcomplicating strategies. The number one reason 90% of traders fail has nothing to do with strategy. Nearly every profitable trader I know, including myself, started the same way. Drowning in indicators, trying every new system, convinced that complexity equals profit.
When he says strategies, hey, models too. Models too. Everybody be focused on models and shit. Does this model work? Does this model work? Models too, bruh.
And I spent my first 3 years collecting strategies like Pokemon cards. The result, though, was consistent losses and complete confusion. And here's what I learned the hard way. So more tools create more confusion and not clarity. I once had dozens of indicators on my chart and I couldn't even see price. So the majority of indicators out there are just based on price itself. So what I had to learn over time was, if I just learned how to read price without the indicators, then I didn't need the indicator. Price itself is going to tell you where the market's going to go. It's giving you the story. And a lot of...
I think I started with indicators. I think low-key everybody starts with an indicator or something. But like, I started with indicators and I used that shit for like a month. And I had to switch it up after that, bro.
The indicators out there are just lagging derivatives of price. You guys can ask any profitable trader out there and they'll tell you the same thing, that less is more. So the strategy that made me the most amount of money has 0 indicators. Just a couple lines on a chart.
Hey, he flexing on them indicators. But hey, y'all people who be using indicators, bro, he flexing on y'all.
Couple rectangles, maybe a Fibonacci tool, and just key levels where I expect the markets to react from. The market is already telling you everything that you need to know if you stop drowning in the noise. And this isn't just theory, this is what actually works after 14 years of trial and error. Now, you guys have probably heard everybody talking about system hopping when you first get into the markets. I want to put emphasis on the fact that you only need to master one before you try and learn another. And I didn't become profitable until I focused on just one strategy. You guys can go online right now and find 10 different strategies taught by 20 different people, and they're all teaching it differently. The key is that you stick with one long enough to find out if it actually has an edge or not.
Right, you gotta, you know what I'm saying? They say throw mud at the wall and see which one stick. You got, you know what I'm saying? With that strategy, you gotta keep throwing. You know what I'm saying?
And even after all that, the biggest lever that you can pull when it comes to profitability is not your strategy. It's your risk management, your trade management, and your psychology. You could have a below average strategy, but if you have really great risk management, really great trade management, and really great psychology...
Talk your shit, Jadecap. Talk your shit. You know what I'm saying? Tell them.
You can turn that average strategy into a winner. Now, is it boring? Maybe. But is it profitable? Absolutely. The traders who commit to one approach always outperform the system hoppers. But even with the perfect, simple strategy, most traders still fail because of this one critical mistake.
Human error. You know what I'm saying? We ain't perfect. We ain't robots.
That has nothing to do with entries. If you want to see exactly what my simple, high probability setups look like in real time, I put together a free black book with my top 3 entry models. These are the exact strategies I use to break the world record payout at Apex and make millions of dollars. And the best part is, it's completely free.
For free?
It's in the description.
Gratuit. You know what I'm saying? Free.
Below, grab it when you get a chance. But here's the thing, even with perfect entries, most traders still fail because of this one critical mistake, which is lesson number 2, poor risk management and stop loss discipline.
Oh, shit. Human error. Risk management, stop loss discipline.
This single rule has saved me over $100,000 in losses. Most traders think risk management is boring until they blow their account. I learned this lesson when I lost 60% of my capital in 1 week because I knew the market would turn around. Spoiler alert, It didn't. And every blown account has the same story. Ignored risk management. So here's the math that changed everything. So you never want to risk more than 1 to 2% of your capital per trade. And everybody always talks about this, but why is that?
That doesn't mean risk 1 to 2% on a funded evaluation. All right, now. You know what I'm saying?
So for me, position size matters way more than your entry timing and strategy. Trading is just a game of numbers, and you need to play the game as it's been designed. It's probably the only gambling-esque game where you can set your own odds. So if you're aiming for a 1 to 2 or a 1 to 3, you only need to have a 30 to 40% win rate in order to become profitable. But let's say if you're risking more than 1 or 2% of your account on that specific trade, if you go into a drawdown, it's going to take you a long time to get out of. And not only that, but if you lose 50% of your account, you now have to make 100% to get back to break even. Now, if you guys have been following me for a while, there's something that I like to do just to visualize my capital and my bankroll, and that's having poker chips on my desk. So with the 1 to 2% rule, let's say if I only want to draw down max 20 to 25% of my account, that means I only have 20 to 25 chips.
That's why with my evaluations, I at least divide my total drawdown that I have before you lose the evaluation by 20, 10 or 20. But if it's the funded account, 20, bruh. If this evaluation, like 10, 15, you know what I'm saying? Depending on the trailing drawdown and shit.
I'm allowed to trade with. Now, you will go through losing streaks, and you will have periods where you're going to lose 3, 4, maybe 5 trades in a row. But let's say if you started risking more than 1 to 2%, and now your chips are cut in half.
Yeah, donezo.
Instead of having 20 to 25 chips, you now only have 10. Now, if you've ever been to
and a lot of people can't handle losing 5 trades in a row, knowing you only got 10 bets or 10 chips or 10 trades. You get what I'm saying? Some people are, you lose 5 in a row, most people are crashing out before they trade the next 5 correctly because they see how much drawdown they're in. You know what I'm saying? So sometimes you just gotta cut the chips, bro.
Or you're just trying to manage your bankroll. You know how stressful it can be once your chips start dwindling. As an amateur, everything changes about your trading. You start making poor decisions. You start trying to double down and make it back. And in general, it's just not a good place to be in. Now compare that to another player at the table who has a large stack of chips. They can make proper decisions because they honestly don't care about that next hand that they might lose. And it's the same thing with position sizing. If you're taking positions and you're finding yourself making poor decisions, or you feel like you're about to make poor decisions,
I just love this man so much. I had to lick his forehead. You know what I'm saying?
And trade smaller. You're not quite ready yet to be trading
the glaze is crazy.
bigger sizes. So just remember that your capital is finite, and you need to protect it like your life depends on it, because it does. All right, the next bit on risk management is you need to honor your stops without hesitation. You need to always remind yourself that you're paying the stop loss to do a job. And as humans, the amateur trader, for some reason, loves to intervene with that, and they love to exit manually because they can't handle the emotions of their stop loss being hit. Every trade that I go into, I just assume that money has already left my account in the form.
I swear to God, every time my stop loss get hit, I be, bro, what?
Form of a business expense. And if the stop loss hasn't,
I just be wanting to and just screaming this bitch. You know what I'm saying? Just like. I don't even know what I'm talking about.
Been hit yet, I tend to do nothing. So how many of you guys have been in a trade where you're up a little bit, the market starts retracing on you a little bit, it starts getting really close to your stop loss, and instead of honoring your stop loss,
I got PTSD when he just started saying all that, bruh. My stomach dropped. I ain't gonna lie to you. Like I seen the candlestick start going right up to my stop loss, bro. Like that.
Exit manually, only to see the trade start moving your direction again. Whereas if you didn't do anything and didn't touch your stop loss at all, that market might turn around and trade towards your target again. But because you're making an emotional decision based on your P&L and not based on the chart itself, you have a point of invalidation. The trade is still valid until it takes out your stop loss. So having a logical stop loss in a place where the trade is no longer valid, right? Maybe it's below a swing low or above a swing high if you're short. Until the market trades to that level, your trade is still valid. But again, the amateur...
People just be scared to lose, bro. Like, that's why they be moving their stops to break even quick, be cutting their trade, all type of shit, bro.
Traders will exit their trade as it's approaching their stop loss, only to see the market turn around and run to their target. So learn to stop making emotional decisions
And then niggas crash out after that.
based on the stop loss, based on the P&L, and just let the market do what it has to do. It's going to wiggle around. The markets don't move in a straight line, and you can't control what the market's going to do. So the important thing is that you have a plan going into the trade, and you need to follow that plan religiously. There's absolutely no exceptions to this. Once you can master this, I guarantee you will find better results in your trading. Alright, so let's talk about the different risk rules for funded accounts versus personal accounts. Now, I don't really treat these accounts as if they were any different. Now, what I tend to do is figure out what the drawdown amount is for a funded account or a personal account, and what I'm comfortable losing, and then I determine how many chips do I want to have in my stack to give me the best odds of success. So for example, if I have a $2,000 limit for a funded account, what I'm going to do is divide that $2,000 by however many chips I want, and let's say for this example, it's going to be 20. That means I cannot risk more than $100 per trade on any given trade. Now,
I had just said this like 3 minutes ago. You know what I'm saying?
you're probably going to say, you know, Kyle, that's not enough money for me to actually make a living off of trading. Well, here's where things get really interesting. A big edge that I have in my...
Want, nigga. Hey, you losing all your shit? Is that not enough? You know what I'm saying? You blowing accounts all the time? Is that not enough? You know what I'm saying? Hey, lock in. You know what I'm saying? Lock in.
My trading is that I
I look like a fucking crackhead. Goddamn, what the fuck going on?
scale into trades. So let's say, for example, if you're managing your stops appropriately, let's say if you put down one chip and this chip is worth $100. Now all of a sudden the market moves in your favor, and it's logical to find a new area where you can adjust the stop loss and maybe take this $100 risk off the table. Well, now I can place another $100 chip on the table, and my new stop loss for this new position is the entry point of my first position. Okay, so for that first position, that stop loss is now a break even. On the second position, my stop loss is where my entry is on my first one, or where the break even point is on that first position. So overall, if I get stopped out on both of those trades, I'm only going to lose one of my chips. This other chip goes back into my stack because it's break even. But perfect risk management won't save you from the psychological trap that destroys even traders with flawless entries and stops. So this next point is where most traders either break through or break down. So lesson number 3 is emotional decision making and revenge trading.
I need this lesson right here, bruh. I think a lot of us, this is like one of our main mistakes, bruh, that we make with our trading is just revenge trading, bro, and tilting our account away, knowing damn well it's just a bad day.
Or just a bad week. Because of this one emotion. The revenge trade cycle destroyed at first, I don't know.
Damn, Jadecap, the fuck? Was that my...
Number 3 is emotional decision making and revenge trading. I once lost $12,000 in 20 minutes because of this one emotion. The revenge trading cycle destroyed my first, I don't know, 5-10 accounts, but the simple journaling trick I discovered changed everything. Here's the brutal truth. Your biggest enemy isn't the market. It's the person staring back at you in the mirror. Every trader I've mentored has this same battle, and you're...
Every time I blow my account, I be looking at myself like... Oh, shit. Fuck is wrong with you, man? Fuck!
Not alone in this struggle. One bad trade leads to 10 worse ones, and you lose $500, so you risk $1,000 to get it back, and then you lose that, so you risk $2,000, and before you know it, you've turned a small loss into account suicide. Trust me, I've been there. It's ugly. And I'm sharing this embarrassing moment because I want you to avoid the same pain. So revenge trading really is an ego problem. As humans, and in an industry where it's mostly male dominant, we just hate losing. We cannot take a loss and get off the screens. We want to prove to the market and everybody else that we're right about a specific trade, about some specific analysis. And I can tell you from the bottom of my heart, whenever I battled the market or I wanted to prove my friend,
I'm so bad at this, bruh, where I don't like losing, where like I'll be in a Call of Duty lobby with my friends, bruh, and we be stuck in a spawn trap, and I'm the one that's trying to get out the spawn trap, and I won't leave. My friends are gone. I'm not leaving though until I get out that spawn trap and get at least 2 kills or some shit. You know, I'm crazy.
friends wrong on a specific trade idea, it always came back and burned me because I took one loss on that idea and I needed to prove it to them and the market and myself that I'm right about this analysis.
Shit, the market low-key be having me spawn trap. I keep trying to sell while that shit keep going up. Got me in a spawn trap, bruh. Then until my whole account gone, bruh.
And really it just leads to spiraling losses. The biggest advice I can give you as far as revenge trading is you just need to get comfortable with the losses. Unless you're comfortable with the losses, you're going to continue to revenge trade and it's going to continue to burn you. Now, another big problem with emotions is fear. And that's because you just can't accept the uncertainty that is the markets. Now, if you're a control freak, you're going to have a really, really hard time in the markets. Once you place the position, once you do the analysis, once you set your stop loss and take profit, there's absolutely nothing we can do about what that trade is going to do. It could go straight to your target, it could go sideways for a little bit, it could go straight to your stop loss, but you can't control that. And that uncertainty creates fear. So part of the experience that you're going to gain as a trader, which I can't pass to you, I can only talk about it, is how you feel when you put on risk. Honestly, the best trades that you're ever going to have should feel effortless. You shouldn't be expending tons of mental capital trying to manage your positions.
Like, should I do this? Should I do that? What should I do? Fuck, what should I do? Like, and then you just do something stupid, bruh. Like, you shouldn't be feeling like that.
Again, the markets are going to do what they're going to do. You cannot force them to go to your target faster. So oftentimes the best thing to do is
like TJR, bro. If y'all watched TJR last video, bro was like looking at his shit hard as hell, bro. Started like flipping through all type of time frames just to make price drop, bro.
Not even look at the trade once you're in the position. You shouldn't be trading for excitement. We're here to make money. And oftentimes the market is going to do the heavy lifting. Once you're in the trade, just leave it alone and let the market tell you if you're right or wrong. Now, why do so many traders have such a hard time with their emotions? It's because they're not treating trading like an actual business. Okay, real businesses have real expenses. They're paying vendors, they're paying their employees, maybe they're paying for inventory, and they need all these things to be profitable. And just like that, in trading, we need expenses in order to become profitable, but we need to limit those expenses. Okay, if our expenses get out of control, and quote unquote our losses get out of control, then we can no longer operate our business. So when you sit down and look at your books, if you have very large expenses, you have to find a way to cut those expenses. So that means not moving your stop losses when the trade's going against you. Maybe it's your position sizing. Maybe you're consistent for a very long time and then you have one day or 1 week where you over leverage and now all of a sudden you have this massive loss on your books. If you want to find consistency, keep the position sizing proper, make sure you're not moving your stop losses wider, and make sure you're removing risk if the trade is going in your favor. Okay, a major hack.
Yeah, like if it start breaking lows and going through inversion FEGs, don't move it too quick. Make sure it's breaking and going through lows and shit, and like going towards your take profit before you start moving your stop loss. And sometimes I won't even move it at break even. Yeah, I'll put it like halfway to, that way I'll take half a loss. And so just in case it did have to retrace a little bit and it still could go my way and shit, I'll take half a loss. You feel me? But if that shit's like right at my TP, bruh, or very close to your TP where it shouldn't be really coming back up there, that's when I put it at break even.
When it comes to emotions and trading is journaling. And I'm not talking about journaling just my trades. I'm talking about journaling my emotions. So it's very important once you're in the trade to write down how you actually feel. Okay, if the trade starts moving in your favor, how do I feel? If the trade starts moving against you, how do you feel? And what are the actions that you take when those emotions pop up?
Like I want to crash out and I end up crashing out.
So you have these emotional triggers, and what happened to me for a long time was when I felt fearful about a trade and I moved my stop loss wider, right? Because I didn't want to take a loss. Or if I get super excited about a trade, maybe I scale in too heavily, right? These are all actions that are caused by my emotions. So those emotional triggers, once I could figure them out based on my journal, I stopped making those mistakes. And nowadays I find so much more valuable data in my journaling about my emotions than I do for my actual trade data itself. So this simple practice turned me from an emotional wreck into a mechanical trader. Now, even if you master your emotions, there's
W advice, man. W advice.
Still this patience killer that destroys accounts faster than bad entries. And most traders don't even realize they're doing it. which is less than
Yeah, you gotta kind of be like a scientist, bro. Like you gotta literally get the data, even of your emotions, not just like entries and what the market did, and even just a little bit of your emotions, because then you figure out the why. You figure out the fact of why you keep blowing your shit or why you keep tilting and shit. You know what I'm saying?
number 4, lack of patience.
Hold on, I'm about to get some cheese balls real quick. Hold on, I'll be right back. You know what I'm saying? We got the cheese balls. You know what I'm saying? Hey, why Jadecap kind of look like a big ass cheese ball? I ain't gonna lie to you guys.
It rewards those who wait, but punishes those who chase. In my 14 years of trading, I've seen countless amateurs jump into trades too early or exit prematurely due to impatience. The market doesn't care about your bills, your timeline, or your need for action. It moves on its own schedule. And after 14 years, I can tell you with certainty that patience is the ultimate edge. Now, overtrading will kill your account faster than bad entries. Some days there's no good setups, and that's okay. Getting paid to do nothing is still getting paid. But the best traders are comfortable with boredom. Not only do you need patience in waiting for the right setup, but once you're in the trade, there's nothing we can do about that trade. We need to wait patiently to see if the market is going to agree with us or not. And I'm sure you guys have heard the saying before, but you don't want to destroy your account from death by 1,000 cuts. And that's essentially what I did for many, many years. So I would enter an initial trade, and maybe if the market went against me, I would close that initial trade, enter in the opposite direction, and then I would get stopped out because it was going my initial direction. I would get back in it, and it was just back and forth, back and forth, back and forth, and I was taking these small paper cuts. They would never be 1R losses, but they would add up over time because I just didn't have the patience to let that initial position do its thing, right? The market's going to wiggle around. Right? The market does not go in a straight line. As much as we like to believe that it does, you know, there's those very one-off trades where you enter and it goes straight to your take profit. But what about the
I like those trades
where you enter and then the next 15-minute candle maybe goes in your direction, and the next 15-minute candle after that goes against you, and you're back at break even. And if you just exited or flipped bias, you would take a loss on that specific trade. Whereas if you just entered that first position and didn't do anything, maybe by the end of the day, it's going to reach your take profit level. And this just came from realization where I was going back through my trades, and some of my trades I had were swing trades. Okay, so I planned a trade on the 4-hour time frame, but then every 15 minutes I was changing my ideas, going back and forth. You know, once I was long, I would go short once the market went against me and it looked like it was about to turn around, only for the market to slowly drift higher and higher towards my target. And in that whole time period, maybe it was a 2-week swing trade, right? It took 2 weeks to get to that target. I was in 500 different trades, taking losses on every single direction, when if I just placed that one position and left it alone, did something else with my life, went outside, touched grass, went to the beach, did anything other than stare at the chart, I would be a profitable trader. And every profitable trader I know has mastered the art of doing nothing. Now, your trade exits. Okay, everyone says to hold your winners and cut your losers, but most people do the opposite. We're wired to take small profits because it feels good, and then hold on to losses, hoping they're going to turn around because we don't want to be wrong. So big winners are rare, so when you get one, you need to make sure you let it run. Now, I have this very simple rule. If I enter a trade where my stop loss is 1R and I'm targeting 3R, I do absolutely nothing to that trade unless it's up 1R at least. If it's trading towards my stop loss, I don't do anything. Because I have had trades where it's gotten very, very close to my stop loss, turn around and hit full TP. But that's because I am so comfortable with the risk that I put on and the exit that I am trying to plan. So when it comes to my exit, I tend to do nothing. If it's under 1R profit, so let's say if you enter a trade and it's up half an R, I don't do anything because I need to be able to have those winners pay for the losers. If you are not maximizing on the winning trades where you're getting 2, 3R, 4R multiples, okay, so your average loss should be, let's say 1R. Your average loss, $100. Your average win, however, should be $200, $300, $400, $500.
Yeah, a lot of traders that I see, like new and upcoming, like people who be starting YouTube channels or be doing YouTube and they're still trying to get profitable and shit. Every time I look at their winners and their losing days are just as big as their winning days. Sometimes bigger. Their losing days are sometimes bigger than their winner days, and it's just like you can't. It's hard to become profitable with like that. You know what I'm saying? If you risking $200, you want to make $300 to $400. If your losing days are $200, your winning days need to be $400, $350. You know what I'm saying?
You guys can see here, this is my record over the past week. All my losses are extremely small, yet all my winners are a large multiple of that. So if I go on a losing streak, I could lose 5, 10 trades in a row and I would still be up. But even the most patient, disciplined trader can still fail because of these mental barriers that most people don't even know exist. And I'm about to show you how to overcome them. Now, if you're serious about putting all this together into a complete system,
lock in right here. Lock in.
I have something special for you. The Trading Apprentice is my comprehensive mentorship where I show you exact...
Oh, Jadecap! Yo! Just, yo!
How to apply these principles on live funded accounts. You get the strategy, the psychology, coaching, live trade reviews, and direct access to me. This isn't theory, it's the exact system I use to trade millions and prop firm capital. My students are getting funded and making consistent withdrawals using these methods. It's not for everyone, but if you're ready to stop making these mistakes and start getting consistent results, check it out in the description. But first, let me show you the mental barriers that trip up even the most disciplined traders.
Okay, it was just an W advertisement. He giving some sauce right after. Okay, I thought he was about to be like, come to my, I thought he was gonna be like, yeah, join my mentorship to get these, to get the sauce. You know what I'm saying? And in the video right there, hey, listen, my fault, Jadecap. I ain't know your game. I didn't know your game. My fault.
Lesson number 5: mental barriers and external distractions. Trading while working a 9-to-5 nearly destroyed my marriage. The mental game separates profitable traders from everyone else, and I used to check charts during meetings, trade from bathroom stalls, and argue with my wife about missing the move. It was chaos disguised as dedication. Now, I'm sharing this embarrassing truth because I want you to learn from my mistakes and not repeat them. A lot of traders have a focus problem, so now I have specific trading hours where I'm 100% focused. No phone calls, no emails, no distractions. And when you're working a 9-to-5 job, that is very, very difficult to do. You're distracted by all these different things going on, and it's very hard to put your attention and focus into trading, which requires almost 100% of your attention at times. Or at least that's what I thought. So unless you know somebody that's a full-time trader, this idea that we need to be glued in front of the charts 24 hours a day in order to become a full-time trader, that is just not true whatsoever. Now, when I'm talking about focus, I'm only talking about for a very specific amount of time. So when you sit down and do your analysis at night, you need 100% focus. And then when it comes time for you...
Bruh, why is y'all looking at my ass, bruh?
What's wrong with y'all? That's when you need focus as well. But once you're in the trade and you've set your parameters, you have your entry, you have your stop loss, you have your take profit, there's really not much else you can do. You have to let the trade do what it's going to do. And I thought that putting more and more focus into those specific trades would give me
W apple juice. You know what I'm saying? When you're eating some cheese balls, W apple juice, bro.
Results. When in fact, it did the opposite. I was more distracted at work, I was more distracted on the charts, and I just was not making proper decisions. So as you can imagine, when you're working a regular job and you're putting all this extra effort into the markets, it does not give you better results. And I only noticed this when I sat down and took a good hard look at what gave me results in trading. Some of the best trades that I had was when I set my trade and didn't do anything. Okay, so many traders out there have a focus problem where they're putting too much focus on the markets. Outside of your analysis and your execution, we really can't do anything. So what allowed me to leave...
Even when people be analyzing, sometimes they be all over the place and shit, or like can't focus and like just key in on a few set of things. Your process should be simple to where like it's easy to just simply, you know what I'm saying, instead of being all over the place.
My job initially was focusing on the style of trading that fit my current lifestyle because I could not be in front of the charts all the time. I had meetings. I could not focus on intraday entries and exits, so I went to swing trading. And with swing trading, I only needed to check my charts once every 4 hours. Now, with swing trading, it just gives you so much more time to make decisions. If you're swing trading, but then you're looking at the 5-minute or the 1-minute charts, you're doing it completely wrong. Place a trade on a 4-hour time frame and don't look at it again for another 4 hours. Maybe don't even look at it again for another 8 hours. So if you go through your data and you look at your trade journal, if you place a 4-hour trade, you have to study how long it's going to take for that trade to possibly pan out. It might take 16, 20, 24, 30 hours plus before it starts really moving in your favor. So you don't need to quit your job to trade successfully. And my most profitable students trade probably 90 minutes a day. They have systems, they're not gambling habits, and they plan their trades and they trade their plans. Now, pre-market rituals.
Become a student, y'all. Lock in, tap in. You know what I'm saying?
I spend 15 minutes almost every morning meditating and going over my plan, checking my emotional state, and settling my intentions. So this simple routine has prevented countless emotional trades because I'm aware of what I'm doing every single day. And after 14 years, I can tell you that preparation beats talent every single time. Now, those are the 5 core mistakes, but there are 3 advanced traps that even experienced traders fall into. And the first one will shock you because it happens right after you think you've made it. Alright, the first trap is the funding trap. Getting funded is easy, but staying funded is where the real battle is. Now, I know it's so easy to get excited about passing a funded account, put it on this pedestal, without realizing like the real battle starts once you get that funded account. You're so focused on the payout rules, the consistency rules, the drawdown rules, all the news rules, that you lose sight of how to actually trade properly. And what I see what happens with a lot of traders is they get extremely impatient and they want to hit the payout window as soon as it's available. So they force setups, they overtrade, they oversize, and it just ends in a blown up account. Now, this is really where all these prop firms make all their money, is because all these retail traders, they don't have the patience to be able to trade for extended periods of time without getting paid. You guys have this specific timeline of, I'm gonna get funded and get paid out in 1 or 2 weeks. But the real...
Yeah, that's why I blew my account even after you reach a payout. It's another phase, like a barrier that you got to get through, because you put expectations on yourself that you need to continue to get payouts. You feel me? And it might be a bad month. You know what I'm saying? It might be a bad quarter. You never know, bruh. You just gotta stick to the process, and not blow your shit up. You know what I'm saying? And expect some months you're not gonna get a payout.
The way that you should be looking at this is, how do I keep the account long enough, and how do I scale my capital? So maybe it's a money thing. If you have a 100K account and you're making $1,000, $2,000, and you're not realizing like, hey, this money isn't really changing my life a whole lot, you need to realize like scaling your capital to a certain point where making that $1,000 or $2,000 across 5, 6, 7, 8 accounts is now changing your lifestyle. So just think of it like this. It's all a numbers and percentage game. If you can make 1% on a 100K account, imagine what that 1% is going to look like when you're managing 500K or $1 million in funded capital. You're making 5 to 10 times as much with the same exact trades. So you need to be able to protect the accounts and scale the capital. If you're consistently blowing up your accounts, you can never scale your capital properly. Funded accounts are precious, so treat them like the rare opportunity that they are. You don't want to have to blow up your account and go through the long, drawn-out process of getting funded again.
They say trading small is really trading big. You feel me? You want to be the turtle, not the rabbit, you know? Small gains, it ends up being bigger gains, because, like, say those smaller gains, you take all those smaller gains, compound, and then you start compounding it now. You feel me? You up the risk after, getting those small gains. Now you start upping the risk on those small gains now, type shit. You know what I mean? Then you can scale. So if you're starting off at 0.25%, just to keep it simple, you're starting off at 0.25%. Once you get up about 3-4%, shit, risk 0.5%. You know what I'm saying? Type shit. Once you get up to like 10% or 11%, risk 1% now. And now you really, you know what I'm saying? You stacking that account.
During that evaluation phase, you are not making any money. And the time that it takes to get funded again, you could have been making real money if you had just kept the funded account. But before you get funded, there's this one trap that keeps traders broke and searching forever. And it nearly cost me almost $50,000. And that is the information overload problem. So every trader out there, at least the ones that haven't consistently made it yet and realize this, is that more information doesn't equal more profit. Everyone thinks that they could go out there and find this one holy grail concept or strategy that's going to give them 100% confidence and profitability in the markets, and that's just not the case. So it leads you to constantly looking for new things and tweaking your strategy, and you never get comfortable with one specific system. You're always adding new things, and what you don't realize is adding new things to your system does not change the probability of the next trade that you take. It has the same probability. So just as an example, I don't know Elliott Wave personally, but even if I were to learn it, if I placed a trade right now, it still has the same probability as if I didn't know it. If I come to the same conclusion with Elliott Wave or without it, the market's either going to go up, down, or sideways. Me knowing something more is not going to change the outcome of that. And what you need to get comfortable with is, no matter how much knowledge of a specific market or a specific strategy that you have, you're still going to have losing trades. There's absolutely nothing out there that is going to give you a 100% strike rate. And what I found was the biggest things that had an impact on my overall profitability was not the strategy, and it wasn't new concepts. It was mastering risk management, getting better at trade management, and getting better at my emotional awareness. If you can master those 3 things, I guarantee that you can take an average strategy and make it excellent. And a huge misconception that most people think when they go full-time or they're a consistently profitable trader is if they pour more and more hours into the charts and into the markets that they're going to become more and more profitable. The only thing that's going to happen from that situation is you're going to burn out faster, you're going to have less mental capital, and you're going to make worse decisions because you're tired. And the whole point of getting into trading in the first place is so we can get our time freedom back. We don't want to just have another 9-to-5 desk job. And what you're going to realize at some point is that you don't need to spend a whole lot of time in front of the markets and in front of the charts. And in fact, the less time I need to spend in front of the charts to make my profit for the week, the better. So just remember that your time is limited. It's a scarce resource, so you need to stop consuming and just start executing. But here's the final trap that catches traders, even the ones who avoid all the others. It's the math that's going to humble you no matter how smart you think you are. So think about this. You could have 10 winning trades in a row and still be unprofitable. And I've seen tons of examples of this in my community and online, where traders have 2 to 3 or 4 weeks of consistent profits, and then in 1 to 2
and then they blow that shit up in 2 days on an NFP week.
bad days or a couple bad weeks, they give back all of the profits. You guys need to realize that trading is very streaky. You're going to go on cold streaks, you're going to go on hot streaks, and it's about minimizing the damage during those cold streaks. It's about accepting the probabilities of the market.
Real shit, real shit, real
With the
shit.
proper risk to reward,
It's harder said than done, bro. We just got to remind ourselves when we actually execute in the market and when we're coming to work, you feel me? We got to remind ourselves this shit, bro. So even when you lose, you got to remind yourself this shit, bro. Like that ass.
you only need to have a 35 to 40% win rate in order to be profitable. Now, if that makes you uncomfortable and you're uncomfortable losing that many trades, maybe trading is not for you. The key thing is that you're not consistent with your trade frequency or your trade sizing, which is holding you back. You need to be able to have the winners pay for the losers, and you're going to have losers. So if I can aim for a 3 or a 4R on a consistent basis, think about how many losing trades I can take in a row. Let's say if I have 2 winners in a row, I would have to lose 6, maybe 8 trades in a row just to get back to break even. Now, when I'm always thinking about this math, it allows me to hold my trades for longer, because I know if I consistently cut my trades at a 1R or less than a 1R, maybe even a 1.5R, I know over time, if I go on a losing streak, my P&L is going to be negative.
Now, don't let this shit get to our head now. Going for 1 to 10? You know what I'm saying? 1 to 5? Kind of pushing it. You pushing it. You know what I'm saying? But you getting there. 1 to 2, 1 to 3, 1 to 1.5. That's all you need. 1 to 1.5. Partial out if you need to. Partial. Aim for 2 to 2.5 after you partial out that 1.5. Aim for 2.5 next for your next TP or another area, PD array, or whatever that you think might, price might reject off of type shit. You know what I'm saying?
And you're only going to realize this when you start taking really good account of your trading books. So just understand that you need to put your ego aside and realize that you're going to be wrong, and you're going to be wrong a lot during your trading career. Almost 50 to 60% of the time, I'm wrong. But I'm able to accept that and maybe take a small loss or a paper cut instead of widening my stop, taking a large loss, or over trading because I think I'm going to be right. With these 8 lessons, you now have 14 years of hard-earned wisdom in 30 minutes. But knowing these mistakes...
All right, WVid, Jadecap. You know what I'm saying? We appreciate it. You know what I'm saying? Hey, like you said, bruh, you got just stick to the process. You know what I'm saying? Make sure your winners are bigger than your losers. Don't over trade. Don't over risk. Don't overthink managing your position. All type of shit. You know what I'm saying? For example, Hey, if y'all have not seen my live, I'm doing a YouTube back test. I'm trying to turn this 100,000 to $1 million. You know what I'm saying? But even when you look at the analytics, when you're back testing, you feel me? Look how many losers like that. Look, 4 in a row. You know what I'm saying? But you got to eat through those. I'm risking $10,000 per trade. You eat through those. You feel me? But look, your winners have to be bigger than your losing days. Your winners have to be bigger than your losing days. Your winner have, you know what I'm saying? 19,000, bigger than my losing days. This is like 2 trades, but this is just 1 trade. You know what I'm saying? Even when you have a 40% win rate, because, listen, hold on, 43% win rate. I lost 13, 110. You know what I'm saying? Like, you're going to go through losing streaks. You know what I'm saying? So, it's just all about not crashing out on these type of days. You know what I mean? So, if you're struggling... If you're struggling with accepting losses and shit, you know what I'm saying? Shit, go back test. You feel me? And when you go through a losing streak, don't over risk, don't over blow up. See if you can eat through that and get that P&L curve going back up type shit. You know what I'm saying? Just do that, and then you'll also remind yourself when you're in a live market, like, look, yo, when I was down on my back testing, remember that you recovered it. You know what I'm saying? So don't just let that one day blow you up. You know what I mean? I have to remind myself that shit, bro. You know what I'm saying? So, yeah, bro, we all got this, bro. It's just those little things that we gotta fix. You know what I mean? But yeah, I hope you guys enjoyed this video. If you did, go ahead and smash that like button. If you're new to the channel, sub to the motherfucking channel. You know what I'm saying? But yeah, I hope you guys have a good ass day. Peace.